Hello everyone, this is Coach Michelle. Hope you guys are having an amazing day. I'm coming to you from the ATL, and today's video is very important. Very important. We talk about taxes. Quite a few people posted, I think just because we're at the end of the year, it's becoming more popular when we're talking about taxes. Well, I'm going to tell you this. I am not a tax professional. I've had issues with taxes. Baby, when you come from the hood and you start making a whole lot of money, you gotta know something, know somebody, or figure something out. Because let me tell you, when that money start coming in and you start spending that money, you gotta know you gotta pay taxes. So when I seen this question on the sheet from our Facebook group, I'm like, baby, let me talk about it. But I must preference this with, I am not a tax professional. I am not giving you tax advice. Please seek professional advice. I am only gonna tell you based on my experience. That's it. I've been an entrepreneur since 2003. I've seen a lot, done a lot, made a lot of money, lost a lot of money, made a whole bunch of mistakes. And that's why I'm trying to keep you guys from making the mistakes that I have made. So welcome to my channel. Those of you that don't know me, I'm Coach Michelle, and I help individuals start and grow their home care business. So today's video is about how much should I save? How much should I save in taxes? No, that's not correct. How much should I save for my taxes in my home care business? So guys, off the cuff, I'm going to say 30%. I'm going to recommend that you save 30% after your expenses, right? And again, I'm not a tax professional. Matter of fact, let me change that. That's what I did. I'm not telling you to save 30%. I'm telling you my story, right? So that's what I recommend, because I didn't do that before and I got jammed up. I had a lot of tax issues. I had a lien on my property. So just get what I'm telling you. You don't want the problems that I had, okay? Let me just keep it real. So first thing you're going to do, guys, it depends on your entity. So really understand the type of entity that you're establishing. Most people start out with an LLC because they want that protection to separate their personal assets from their business assets. However, you really want to get with a professional, especially in this industry, because you start making money really fast. So for me, my filing status, I'm an LLC, my filing status S Corp, right? So the reason why I went into an S Corp long time ago is because it saves money for me. As far as before I switched my filing status, I was paying a lot of money. I think it's 15 point something percent. I'm not really sure, for self-employment tax. So on top of what I was paying, I had to pay that self-employment tax. And that's on everything that's left over. So it's a big deal, guys. 15 point something percent or whatever that percentage is, it's a big deal when you are generating a lot of money, right? And that's the goal for all of you. I'm assuming that you want to do something that you love, do something that you enjoy, that you're passionate about, you believe that is a part of your calling, or you're just a savvy business person and want to get into a business that's lucrative and it ain't going nowhere. No, it ain't going anywhere, right? So you want to definitely look into that. So if you're just getting started, thinking about getting started, talk to your CPA, your tax professional, your attorney, and see if it makes sense for you to set up as an LLC, S filing, or whatever your entity, because there's different type depending on your structure and what you intend for your business. So that's really important. And you can always switch, right? When I first started, I was just an LLC and I was paying self-employment tax on top of that until my CPA said, hey, you need to switch this over. And I was able to backdate mine. So that's something, we're at the end of the year now and you like, oh my God, I didn't know I was going to make this much money. So you can talk to your tax professional about backdating your S Corp status as well. So you can talk to them to figure that out. I know I did it, but again, I'm not giving any tax advice. I don't want nobody to say Coach Michelle said, and then you got to pay a whole bunch of taxes. Then you be jacked up like I was jacked up. I don't want them problems for nobody, okay? So I'm going to recommend that you figure out your entity, first, because that does affect your filing, the way you file your taxes, right? And also the cost, right? So if you're an LLC and, you're doing a Schedule C, then you're paying a fee. If you're filing, your status as an S corp, then you're filing a corporate return, right? That's what I do. So you're filing a corporate return. Now, I can tell you I have a corporate return and I have a tax return with a Schedule C as well. So it just depends. Everybody's situation different. I'm just giving you probably TMI, too much information, but I like to, make sure you guys, have at least enough nuggets and gems to be able to do your research or due diligence and talk to your professional and, figure it out. So on top of setting up your entity the proper way, you just don't want to just arbitrarily say, okay, everybody doing this, so I'm gonna do it. You want to make sure you pick the right one for your business structure and what your business plan look like. And then you want to have, the second thing I would recommend is have a really good CPA. I've had challenges with that. I thought, going with the big boys that it was going to make sense, going with the folk that, all over, TV and everywhere is going to make sense. That has not been the case for me. So just keep that in mind. Do your research. You can check with the Small Business Administration and your local SCORE office, SBA, referrals from friends and in your Facebook groups, just check around and do your research and make sure you find someone that specializes in small business taxes. There is a difference, right? I would recommend, well, again, I have a bookkeeper, someone that can manage my books every month, someone that can reconcile for me, someone that can, give me some direction as well, because tax planning is really important. So I'm going to say tax planning is number 3. Really important outside, or should that be number 4, right? So we said set up your entity, we said get a CPA, a bookkeeper, and then I would say definitely someone that can help guide you from a tax planning perspective. It makes a huge difference. And then the 5th thing, I would say 30% for me, right? So after all expenses, 30%, put that to the side. But let me just digress for a moment. Your revenue ain't your income. Your revenue ain't your income. Your profit ain't your income. There's a difference. Depending on what type of entity you set up, one of the requirements may be that you pay yourself, right? So you got to make sure you're clear. So if you, depending on what, like for me, for instance, right? So I'm on payroll. So you got to make sure that if you switch over to that S, right, for filing purposes, you have to be on payroll. I have to be on payroll. I'm gonna keep saying me. I usually don't talk about taxes, all this, but since it was up, came up so many times, I said I'm gonna put my big toe in the water here now. So y'all help me out. Give me some comments below. Support your coach now, because I'm stepping out. So I'm telling you what I did, okay? And how it works over here in the Coach Michelle world. So, so the 30%, right? So the way I do it, I have a separate account. So I have a main account where all the revenue come in separate for each business, right? So all the revenue comes into one account per business. So we're not mixing, entities together. And then I have a savings account, a money market account, and a checking account. Actually, 2 checking account. And then so when all the money comes into one account, that's where all the revenue comes in. And then that way it's easy for reconciling and profit and loss and all of that. And then I take money from there and then I put it into my one of my other accounts. And then that way that's for taxes. Boom. That money is there. It's for taxes. Life is good. When it's time to pay that money, I can pull it out and life is good. So that's really important. But I want to also make sure I I really put an emphasis on your revenue and your profit ain't your income. That's really important. So many times people, especially on this Instagram world, people are like, oh, I'll make 7 figures. I make 7 figures. You generate 7 figures in revenue. That doesn't mean you're a millionaire. So that doesn't mean that 7 figures is your income. No. So you have your revenue, you have your expenses, blah, 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 blah. You have your profit. What are you paying yourself? What are you bringing home? Right? That's a whole nother video. But it's really important to understand that, because as you are starting your business and venturing into entrepreneurship, you really have to know the difference between a lot of things, right? Because you want to make sure that you are knowledgeable across the board in the things that you should be and the things that you aren't. Then you want to seek guidance from a professional. And we do talk about these things in our VIP Gold coaching program as well. Yes. Okay. And then I think I touched, one other thing, right? And that's for your federal and state taxes. Now you will be paying employer taxes. You will be paying employer taxes. That's done on a 941 form. That's done quarterly. So you want to make sure that you don't mix that up with the 30% that I just mentioned. Your employer tax is different. And it is a write-off, right? So you are going to do that quarterly, and you're going to do that on a 941 form, okay? Now, let me just digress, if I will. Let me just deviate, if I will. For those of you that did not take advantage of the ERC employee retention credit, ERC, Google that, because you may have left some money on the table. Right? Just because you got the PPP, this is something different, right? So you may qualify. So make sure you Google ERC and see if you qualify to get that money. And it's good money. I think it's from $7,000 to up to, I think, $28,000 per employee that, qualifies. So you want to definitely look into that. Now, if you've already submitted your 941 and you did not take advantage of the ERC, then you would have to resubmit, but you would resubmit a 941X, right? And again, I'm not a professional. I'm just trying to give you guys some nuggets. So let me know what y'all think down in the comments below. And that's the goal, just to, again, give you some feedback and some nuggets and some gems. So let me know, hashtag nugget, hashtag gem, hashtag whatever you want to put down there. So guys, be safe, be wise, seek counsel and mentorship, right? For someone to guide you. So when you get into this business, you don't make mistakes that some of us have made, right? So if you found value in this video, definitely like it, subscribe to the channel. There's tons of videos, and definitely I would love to see you guys at my Home Care Empowerment Conference. We've been doing them since 2017. We sell out every single year, so get your ticket. You could go to myhomecarecoach.com, click on, go to the menu, click on events, and get your ticket. Bring somebody with you. And if you're married, have a significant other, bring that person with you, because there's no conference like the Coach Michelle conference. You guys heard me say that. You've heard other people say it. So you definitely want to be in the building in March. Get your ticket. We sell out every single year. And we have an amazing, amazing coaching program. So I would love for you guys to learn more about that. If you need some guidance and some support, you can check out our coaching program online as well at myhomecarecoach.com. Love you guys. Love you guys. Love you guys. Take care. God bless. And I will see you on the next video. Happy holidays.